Dear student, let's just start another, I would say, practice class. The name of the question is patience. It In this question, examiner has examined employment income, your property income, and the concept of pension as well. Let's try. We are simply required to calculate income tax and capital gain tax liability for the tax year 24-25. For CGT, we know that capital gain is taxed at the end of you have taxed all other sources of income. First, we apply a tax rate on non-saving income. Then we go for saving. Third is dividend. Finally, we go for capital gain. Okay. Patients, this scenario relates to one requirement. Patients retired from her employment on December 24. The following information available in respect of tax year 24-25. And there was one query also. Let me reply. Student, in practice class, we will not be only discussing the long questions. We will also be discussing the MCQs as well as your section B questions as well. So in practice classes, inshallah, you will get the flavor of entire, I would say, question pattern. So it is not like that. Like today, I've chosen only the long question. So it does not mean in the rest of the classes, we will be just focusing on this area. So all you need is have a really good grip on regular lectures and then obviously on practice videos. Okay. Employment income. Patience was retired on December 24. It means 9 months. Patience was employed because your tax year starts from 6 April 24. From 6 April 24 till December 24, we have 9 months. Patience was employed by a private school as a teacher from 6 April December to December 24. Her salary is 5750 per month. So multiply by 9, that gives you 5750 into 9. That gives you 51,750. During the period 6 April to December 24, Patience contributed 6% of her monthly gross salary of 5750 into her employer's occupational pension scheme. So look at this repetition of the concept. When employee contributes in occupational pension plan, it's a deductible expense for the employee. It reduces the employment income of the employee. Patient's employer contributed. Can I say employer's contribution is an exempt benefit? Employer's contribution is an exempt benefit. Okay, no issue at all. Shami, no issue at all. So employer's contribution in occupational pension scheme is an exempt benefit. So let's at least deal with these 2 points. Okay. You should indicate by use of 0 any items which are not taxable or deductible. The following marks are allocated. For income tax, 8 marks. Capital gain, we have 2 marks. So Patience income tax computation. Income tax computation. We're getting a salary of only 9 months because on December 24, Patience retired. Employment income. Salary 9 months. 5,750 into 9 gives us 51,750. When employee contributes in occupational pension plan, it reduces employee's employment income. An employer contribution is an exempt benefit. So pension contribution by Patience, 7% of the salary, 6% of the salary If you take 6% of 51,750, I'm getting 3,105. Employer's contribution is an exempt benefit, so you have to write 0. Again, I'm saying if you're not writing 0, you will be getting a 0 marks. Because it is categorically mentioned that if something which does not need any adjustment, you have to write 0. We have done with 1 and 2, go for 3. During the period 6 April to 30th June 24. 6 April to 30th June 24. Patient's granddaughter was provided with a free place at a private school run by patient's employer. The normal fee payable would have been 4,600. The additional marginal expense of providing the place to the grandchild is 540. If you recall, the general rule of taxable benefit is if you come across any benefit which does not have a specific rule, then I'll go for a general rule. The general rule says taxable benefit for the employee is the cost for the employer. Like car benefit, we know how to calculate car benefit. It has a specific rule. Accommodation benefit, how to calculate accommodation benefit, we know that because it has its own rule. But if you come across any benefit which does not have any specific rule, then how will you calculate the tax if that is not an exempt benefit also? Then how will you calculate taxable benefit? Then taxable benefit is direct cost, marginal cost, additional cost for the employer. Here, the additional cost for the employer is 540. So logically, this 540 becomes taxable benefit. So school place cost to the employer is your taxable benefit. Simply cost to employer. Which cost we are talking about? Additional cost, marginal cost. Okay. On 25th June 2024, patient was given a clock valued 600 as an award for her 25 years of teaching at her employer's school. She has not previously received any similar award. It's a long service award. If you recall, then if the long service award value is £50 or less per tax year, then it becomes exempt. Long service award is 20 years or more. So take 600 divided by 25. Let's see how much I'm getting. 600 divided by 25. We are just getting 24. It's far more less than 50. So let me repeat. If the long service award value per tax year is 50 or less, then it becomes the exempt benefit. Is this clear to everyone? So long service award, 20 years or more, it is having value less than 50. Then it's an exempt benefit. Long service award. Exempt because per tax year value is less than £50. Per tax year, the value is less than £50. That's why it is exempt. Question. Actually, the long service means at least 20 years. At least 20. It means it can be more than 20, but it cannot be less than 20. In our question, this gentleman has got the benefit after 25 years. Yes, it is long service. So I am not supposed to divide 600 by 20. I have to divide this by 25. Why 25? Because he got the benefit after 25 years. So the logic is long service means at least 20. The interpretation of at least is equal to greater than 20. Okay. Now come here. Patient's employer provided her with an interest-free loan so that she could purchase a season ticket for the train to work. The of balance of the loan outstanding at 6 April was 8,000. Can I say when beneficial loan amount is less than £10,000, then it is an exempt benefit. If the beneficial loan is not exceeding 10,000, it is exempt benefit. So beneficial loan benefit becomes 0. Loan is less than £10,000. So when someone is getting a beneficial loan and amount of the beneficial loan is less than £10,000, then it becomes the exempt benefit. Okay. Now let's go towards personal pension contributions. During the period 6 April to 31st December 24, patients contributed total 3,600 net into her personal pension scheme. Can I say due to PPC, number one, I have to gross it up by multiplying by this 100 upon 80. I will increase the basic and if needed, higher rate band as well. So basically this 3,600. I'll gross it up. Let's see what is the gross amount I'm getting. I'm getting 4,000. Logically, this 4,500 will increase the limit of your basic rate band as well as it increases the limit of higher rate band if you need. Pension income. During the period from 1st January till 5th April 25, patients receive the state pension 1450. Okay. Pension of 6,000 from her employer's occupational pension scheme and a private pension. So all these pensions you will add in your income. And we know that pension income is also a non-saving income. Pension income is also a non-saving income. So employment income we have already calculated. Here comes the total of employment income. 51,750 minus 3,105 plus 540. I'm getting 49,185. Now simply add the pensions. All the pensions 1450 plus 6,000 plus 3,300. 10,750. Let's go ahead. Property. Patients own 2 residential properties which were let out unfurnished until both properties were sold on December 24. The following information is available in respect of 2 properties. Property 1, rent received during the tax year 24-25 of both the properties. Sale proceed. Property 1, property 2. Allowable revenue expenditure on the first property, on the second property purchase cost. Patience has never occupied either of the two properties as her main residence. Student, can anyone tell us why examiner has mentioned this thing? Patience has never occupied either of the two properties as her main residence. What is the reason of mentioning this? Can anyone relate this to any topic? Why examiner has mentioned this? Any reason? Can I say if your accommodation is your principal private residence, then in case of principal private residence, you get principal private residence relief. So by mentioning this thing means you should not be. No, 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 student, please. No. Nil rate band has no concept at all, please. It is not applicable here. We are not studying the death state of a person. Patience is alive right now, please. Patience is very much alive right now. Basically, mentioning this means students should not be thinking for principal residence relief. Let me just show you working one simply. For the property income, working one. When there are more than one properties, you will have to calculate the total property income. Okay, no issue at all. So property 1, the rent is 3,600 rent. Allowable expense is 4,700. So 3,600 minus 4,700. I'm getting negative 1,100. Property 2, 7,200. Allowable expenses 2,600. So 7,200 minus 2,600, I'm getting 4,600. Can I say 1,100 negative? Property income is 4,600. So the net income is, we are getting 3,500. Can I say net property income is 3,500 and the property income is also your non-saving income? Property income is also your non-saving income. Property income is also your non-saving income. Working to 3,500. So we'll get the total income. Student, I'm getting total income 63,435. Simply we'll deduct the personal allowance, 12,570. Here comes your taxable income. Students' taxable income is 50,865. Now we have to calculate income tax. Can I say before calculating the income tax liability, we have to increase the basic rate band? Can anyone tell us why we need to increase the basic rate band? What is the reason of increasing the basic rate band? Basic rate band limit is 37,700. Yes. Personal pension contribution. We know that gross PPC also increases high rate band, but patients does not have that much income which exceeds high rate band. So simply, but there's no harm if you are increasing 1,25,140 with this. Gross PPC 3,600, 100 upon 80 gives me 4,500. We will get the revised limits. Revised limits. 37,700 plus 4,500. 42,200. 1,25,140 plus 4,500. 1,29,640. So let's come here. Income tax. Working to. Now the limit of the basic rate band is 42,200 into 20%. So how much we are getting? 8,440. Your total taxable income is 50,865. Out of this 50,865, we have already taxed 42,200. How much is left? 50,865 minus 42,200. I'm getting 8,665. Applicable rate is 40%. 3,466. Students, I'm getting income tax liability 11,906. Now let's go ahead for capital gain tax. Capital gain, capital gain, capital gain. Okay. Property 1 is sold for 1,22,000 and it has a purchase price 81,400. So there's a capital gain on property 1. But property 2 is sold for 98,000 and it was bought for 1,03,700. There's a capital loss on property 2. In the current year, if you are having capital gain as well as capital loss, so current year capital loss is deducted against the current year capital gain. Then whatever the net capital gain comes against that net capital gain, you will get annual exempt amount of 3,000. So let me show you this capital gain calculation now. Patience capital gain calculation. Capital gain tax computation. The student on this capital gain calculation, I'm going to ask at least 2 questions. So be ready for those 2 questions. And let's see who will answer this. Property 1, sale proceed is 1,22,000. Cost, the purchase price of the property is 81,400. So there's a capital gain of 40,600, the capital gain on property 1. Property 2, sale proceed of property 2 is 98,000. Property 2 was bought for 1,03,700. So there's a capital loss in property 2, 5,700. Current year capital loss is deducted against the current year capital gain. So I'm getting net chargeable gain. Net chargeable gain is 40,600 minus 5,700. I'm getting 34,900. Annual exempt amount is 3,000. Taxable gain 31,900. My question is, student, what is the relevant CGT rate for this 31,900? Tell me the relevant capital gain rate for this 31,900. Okay, I'll give you the option. Is it 10%, 20%, 18%, or 24%? There are 4 options. Choose any one of them. But after choosing that, give me the reason also. Should I go for 10, 18, 20, 24? So which option should I go and why? Let's see who has given the answer. Okay, there are 2 answers. One is 24, another is 20. So the right answer is 24%. Given by Patrick. So Patrick, may I know the reason? Your answer is correct. Why 24? Your answer is correct. Now I really want to know the reason of this 24. Samraj, your 20% answer is not correct. Patrick, give us the reason why 24. 24 is correct. 24 is a higher tax rate. Gori, this is not the reason. Because income tax has already been taken. That's perfect. That's okay. Why 24? My question is 24 is relevant, but why? All these answers are not acceptable so far. Your basic rate has already consumed. Okay, I agreed with that. No more basic rate. But what is the main reason of 24? Basic rate is utilize, agreed. This reason is acceptable. I want to know one more reason. Guri, it's a residential property. It's not a resident, it's a residential property. Student, when we sell residential properties, if you have a space in the basic rate band, then 18%. Otherwise, 24%. It's a residential property. So 24% is applicable. We have already utilized the basic rate band. Second, we are selling the residential properties. So here comes your capital gain tax. $31,900 into 24%. 31,900 into 24%. I'm getting 7,656. Is this clear to everyone? And Gori, please read what is written. To which properties? Examiner has categorically mentioned these are the residential properties. Now, if I say these are not a residential property, your examiner has written these both are residential properties. So, students, when there's a capital gain on residential properties, if you have a space in the basic rate band, then 18, otherwise 24%. Here we have already utilized the basic rate band, so there's no space in the basic rate band. Obviously, we'll go for 24%. Okay, I have one more question. Let's see who will answer. Can anyone answer when do I need to pay capital gain tax on residential properties? When do I need to pay capital gain tax on residential properties? When do we need to pay capital gain tax on residential properties? Student, you have to be really good in recalling the rules, otherwise, tax will disturb you. When do I need to pay capital gain tax on residential properties? Examiner has not asked here, I know that, but I'm just asking. When do we need to pay capital gain tax on residential properties? Student, you are taking too much time. There's no need to Google the answer. You will not be able to get from Google. Okay, let's see. Who has replied? Oh my God. Which answer is this? Yes, absolutely wrong answer. It's not wrong, it's very wrong. Students, please. Capital gain tax on residential properties will be paid within 60 days of the disposal. You have to inform HMRC within 60 days of the disposal, and you have to pay capital gain tax on residential properties within 60 days of the disposal. Other than residential properties, we always pay capital gain tax on 31st January after the end of the tax year. So, student, as I mentioned earlier in today's for the class before this, I mentioned in tax you have to be really good in recalling the rules. If you're good in recalling the rules, it will not disturb you. But if you're unable to recall the rules, then obviously you won't be able to do anything. So CGT on residential property is paid within 60 days of the disposal. Within 60 days of the disposal, you have to inform HMRC and pay CGT. I hope everyone is understood. Great. Okay, student, this was the third question. We are still left with two more questions to be practiced. But those two more questions, right now we are not practicing those two questions. Those two questions we will be practicing today, but somewhere in the evening. Because I do have other classes also, ATX and then AFM. After that, in the evening, we will be discussing remaining two questions. But don't worry at all. Inshallah, we'll complete all five questions today. And after the completion of these five questions, I'll give another homework to you guys. And I'll give you around 1 or 2 days. No, 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 no. Revision classes will not be on Sunday. They will be on normally on now every day. We are heading towards exam. We on every Sunday we can't do anything. So now we have to, I'll be conducting the live revision classes almost every day. It is not possible. Okay, after every lecture, there's a PDF, yes or no? Students, those PDFs, they are the detail notes. And within that, I have mentioned that you have to pay capital gain tax on residential properties within 60 days. I have mentioned that. So please, there are two types of notes. One is focus notes. Focus notes is the main, I would say, central idea of your 891 pages. But don't ignore the detail notes as well. Okay. So, inshallah, today, late evening, we'll be discussing the remaining two questions. And those they won't be able to take live revision classes, let's say almost every day, you will be getting the recording as well. So, thank you very much that you people have taken out time for today's class. Hope to see you all, inshallah, in the late evening as well. Thank you. What time? So time, I would say Pakistan around maybe 8 p.m. Pakistan time. 8 p.m. UK will be 4 p.m. I believe. UK is 4, but Pakistan is 8. This is just an approximate time. Okay, thank you.